Hey guys, it's James and we are back with video number 9 in this series. Today we are looking at XYLD, trying to determine how much XYLD we need to own to hit $1,000 a month in dividends. This is the 9th video in the series, and if you are coming into this series after September 2020, all of these ETFs will be, or all of the videos that I complete, as well as any video with any ETF suggested from the comments, I will put them all in a playlist and link it in the description so you can check out each and every one, or just pick and choose the ones that you want to see. So what do we do in these videos? We simply take an ETF, head to their webpage, and try to determine what that ETF is actually doing to be able to hit that dividend yield number. How are they actually paying us a dividend yield? Then we go over to Seeking Alpha and try to determine what their historical yield has been, and then come to one solid dividend yield number to try to determine how much of that ETF we need to own to hit $1,000 a month. And we do that over on my compound interest calculator, and we simply change a few numbers. I know it can look overwhelming if it's the first time you've seen it, but we simply change one number and we find out how much of that ETF we need to own to hit that $1,000 a month figure. And then we take that ETF and compare it to an S&P 500 index fund or another index fund that would be comparable. So for XYLD, let's head over to their webpage. XYLD is Global X's S&P 500 covered call ETF. So what does that mean? Well, XYLD seeks to generate income or their dividend yield through covered call writing, which historically produces higher yields in periods of volatility. XYLD has made monthly distributions 9 years running. XYLD writes call options or covered call options on the S&P 500 index, saving investors the time and potential expense of doing so individually. So if we come down to a few key pieces of information, their inception date was June 2013. This will come around back in the video when we come to the end. The expense ratio, they are charging you 0.6% to be able to write the covered calls. And then they own $1.94 billion worth of assets. What are those assets? Well, those are the stocks that they actually buy from the S&P 500. So they're just simply buying the S&P 500 stocks and then writing covered calls on the shares that they own. Now, XYLD only wrote covered calls on 50% of the shares that they own, and the rest of the shares simply grew with the market. So the difference between XYLD and XYLD is XYLD writes covered calls on all of the shares in their portfolio. So what type of dividend yield are we looking at for XYLD? First, let's take a look at their price range over the past 52 weeks. They are looking at anywhere from $51 all the way down to $40.50. And their 12-month trailing yield is looking like 12.76%, which is actually fairly good. And this is one of the numbers that I do trust, this trailing 12-month yield, this yielding number right here. Unlike some of the other Global X ETFs that we have analyzed, I actually trust this number. If you take a look at the dividend history, you can see over the past 12 months, they have not had any large spike in ETF payout. So I'd trust that 12% number. You can see that their payout has been anywhere from around 34 cents, 35 cents, all the way up to about 50 cents a month. So very solid fund, and their last 12 months have been outperforming the previous 12 months and the previous 12 months before that. They did have a huge spike here in December of 2017, but over the past 3 years to 4 years or so, it's been fairly consistent. And starting around September of 2020, it's been up in the range of 40 cents all the way up to 50 cents. So over the past 12 months, it's been about 12.5%. So we'll use that number in our calculation. So coming over to my compound interest calculator, let's go ahead and type in XYLD. That's the ETF we are looking at. Simply type in the dividend yielding number, or the 12-month trailing yield number. It was around 12.5%. We come down to this green box right here. You would need $96,000 worth of XYLD to hit that $1,000 a month in dividends. You would need close to $500,000. If you think this is retirement type of dividends, you would need around $500,000 of XYLD to hit that $5,000 a month in dividends. So last but not least, let's go over to Portfolio Visualizer and take a peek at XYLD versus the S&P 500. So SPY is an index fund that tracks the S&P 500. So SPY is an ETF that tracks the S&P 500 index, and you can see that it has outperformed XYLD in the blue all the way since the inception of XYLD, all the way back from 2013. If you had invested $10,000 in either one, if you reinvest all the dividends, you can see that SPY would have outperformed Global X's XYLD. But if you recall, you're buying XYLD to be able to receive that dividend payout. And simply right here, you can see just mathematically the cumulative annual growth rate of each fund per year. SPY is growing at around 11% per year over the past 9 years. XYLD with that dividend is growing around 5.66%. If you were to remove that dividend, analyze the portfolio, if you were pulling out the dividend and you invested $10,000 in XYLD, well, after 9 years of receiving dividends, your final balance for XYLD would be around $9,332. But over that whole course of the 9 years, you would be receiving that dividend payout. So that is it for XYLD. If you have another ETF you do not see on this list, head down to the comments, let me know what that ETF is, and thanks for watching.